our last speaker, Donald. Welcome, welcome. I'm so happy that you have stopped. I appreciate you. And
hey, sorry, you're breaking up a little bit.
Can you hear me?
There's a delay. Yeah, there's a delay. But I'm happy to be here. I'm excited to talk to everyone today. All right, so I figured since my area of expertise is tax and accounting, I would talk to everybody about that, right? It's my one true love. It's my love language. So I think we have probably all seen social media posts that, claim to be able to save you tens of thousands of dollars on taxes if you just do these 3 things, or you can buy a car in your business and it's 100% deductible, or whatever is the hook that drew you in. And so I figured today we could spend a little bit of time debunking popular social media tax advice. And then I'll tell you what the advice, the little tidbit that they give you, what the real version is, the good and the bad, and then a little bit about how to implement some of these strategies in your business. I think probably a lot of people here are business owners themselves. And so hopefully the information I'm going to share today is super, super relevant. So real quick, just a little bit about me. I am a CPA here in Virginia, although I do have clients all over the country and some out of the country. I founded an accounting firm in 2013. Earlier this year, I acquired another accounting firm, and so we have rebranded the whole entire shebang to Steadfast Bookkeeping. We specialize in working with small business owners for tax strategies. We focus on good accounting, good tax planning, and good tax returns. So I love speaking to groups of business owners about taxes and accounting. It's super powerful. And then just a fun fact about me. In 2022, I went skydiving for the first time and I actually really loved it. That's probably the craziest thing I've ever done. I am an accountant after all, so we're not super crazy, but I really enjoyed it. So we're going to talk some taxes. I know taxes are the bane of your existence. They're the bane of my existence. Nobody loves taxes, even me, although I can talk about them all day and all night. But nobody likes taxes, and that's why people gravitate to those social media posts that promise to save you tens of thousands of dollars or completely change your tax situation, completely eliminate your tax liability. People love that content, and it's not, some of it is blatantly wrong, but it's not usually all wrong. So we're going to dive right in. The first one that I hear a lot that I love is hire your kids in your business. It's tax-free. You can pay them up to $12,500 or whatever is the number they're hawking, tax-free. So is that true or is it not true? It can be true, and here's how. So the truth is, yes, you can hire your kids in your business, but there is some nuance to it. They have to actually do work, right? You can't just pay them for living. You can't just pay them for doing household chores. They have to actually do work in your business. You have to treat them just like any other employee, right? You're not going to pay your other employees if they don't work. Same thing for your kids. You have to pay them as a W-2 employee. You can't just give them cash and write it off. You do not want to issue them a 1099 because then you're going to subject them to self-employment tax. They have to be a W-2 employee paid through payroll like any other employee. And you can't pay them outlandish rates, right? No 12-year-old is going to make $50 an hour to stuff envelopes. That's just not a thing. That's not the amount you would pay somebody else, so it's not the amount you're going to pay your kids. If you are a sole proprietor or a single member LLC, then you do not have to pay Social Security or Medicare tax on their wages, and you also don't have to withhold those from their paychecks. If, however, you are an S corporation, then you do have to withhold Social Security and Medicare and pay both just like any other employee. So as you can see, there is some nuance to this. Now, where does the tax-free piece come in? Here's how that works. You can pay your child or anyone else up to the standard deduction, and as long as they make that amount or less, they're not going to have any taxable income, and so there's no income tax. For 2023, the standard deduction is $13,825, I think, right around there. It changes every year, so I don't memorize it, but We'll just say $13,500 to make the math simple. I think it's $13,850. So you can pay them up to $13,850, and they're not going to have any taxable income on their federal tax return. However, some states, like Virginia, where I'm located, have a lower standard deduction. In Virginia, the standard deduction is only $8,000. So if your child is paid over $8,000, they are going to have a state tax liability, and so you're going to have to withhold state tax. So the answer is yes, you can hire your kids in your business. It may or may not be tax-free, depending on entity type and how much you pay them. All right, next one that I love, and I hear this one a lot. Pay yourself rent tax-free. Your business can pay you for the use of your home, and it's tax-free. This is also known as the Augusta rule or the 14-day rental rule. For those of you who are tax nerds, it's IRS code section 280A. So the truth is, yes, in certain circumstances, your business can pay you for the use of your house in a tax-preferred way. But again, there's some nuance here. So you have to actually hold a business meeting, and you're going to want to document that, have an agenda, who attended, what was discussed. So have records. You have to have good records. It has to be ordinary and necessary, right? So you're not going to be holding, a meeting and you're pay yourself $5,000. You have to pay fair market value for the space, and you're going to want documentation about that. So you can look it up on Airbnb, VRBO, call hotels in your area for how much it costs to rent like conference room space, and have that documented in your records to determine how much you're charging for each day of rental space. And then to maintain that preferential tax treatment, you can only use your home 14 days or less throughout the year. So let's say you want to have a monthly shareholder meeting at your house. That's going to be 12 meetings a year. You're going to document each meeting. You're going to have in your records the fair market value rent for that amount of space in your area. You're not going to look up rental rates in San Diego, California if you live in Virginia Beach, Virginia. You're going to look in your area and have it all documented. There was actually just recently a tax court case about this very thing, and the taxpayers lost. They tried to claim this really crazy high rental of home deduction, and the IRS disallowed it because they didn't have any records of their meetings. They didn't have any documentation for fair rental value for the space. And so the IRS threw it out. And they're not afraid to do that. So make sure you have all of your documentation in order. And then this can definitely work. You can have shareholder meetings. Let's say that you have a monthly get together for your employees, if you're okay to have them at your house. There's a variety of ways that you can meet the criteria to take advantage of this tax strategy, but you don't just get to say that you had a business meeting and then you take a deduction. You have to have all the documentation. Here's one of my favorites, promise number 3, buy a vehicle in your business, write off 100%. So the full statement that you'll usually hear is buy a vehicle in your LLC and write it off 100%. The truth is that yes, you can buy a business vehicle, and yes, you can deduct some or all of the expenses depending on the circumstances. But as with everything else tax-wise, there's a lot of nuance. So anytime you ask me a tax question, the answer is going to be, it depends, because it really depends on your situation. And so let's dive into this one a little bit. First, there must be business use. Just saying it's a business vehicle, just titling it in the company name does not make it a business use vehicle. Also, wrapping the vehicle does not make it 100% business use, and that does not make 100% of the miles business miles. Now, the cost of the wrap can be a business expense, but the vehicle itself, not necessarily. You can only deduct the portion that is business use. So, for example, let's say in 2023, you drive 10,000 miles total, and let's say 4,000 of those were for business and 6,000 were for personal. That means 40% of the usage was business, and so only 40% of the cost is going to be deductible. Then you'll hear people talk about bonus depreciation. You may hear that bonus depreciation is this magic tool that allows you to take a whole bunch of depreciation all in one year. For 2023, bonus depreciation for assets placed in service in 2023 is 80%. So you can write off, if it qualifies, 80% of the cost all in 2023. This can be a really powerful tax strategy. However, it's still limited by the business use portion. So back to my earlier example, if your vehicle is 40% business use, you can write off 40% of those expenses, and your bonus depreciation is limited by that 40% as well. And then there's an added layer. If your business is an S corporation, which a lot of ours are, the value of personal use miles, so let's say your business is an S corporation and you buy a vehicle in the company name, it's titled in the company name, it's registered to the company, insurance is in, commercial auto insurance. The value of those personal miles, back to my earlier example, 4,000 business and 6,000 personal, the value of those 6,000 personal miles is actually taxable income to you and has to be added to your W-2. So it actually creates a tax liability, income tax, when it might not have otherwise. So my recommendation typically, and again, it's facts and circumstances, so it depends, but 9 times out of 10, if the vehicle that you're buying is not going to be for 100% business use, like let's say you're a paint contractor and you're buying a van that the staff uses, the painters use to get to and from job sites, that's 100% business use. If it's your personal vehicle that you use for business and personal, usually I will recommend to have your S corporation pay you a mileage reimbursement under an accountable plan rather than buying the car in the company name, because you create unintended tax consequences when you do that. So buy a vehicle, write it off, maybe not. My all-time favorite one is form an LLC and run your life through the LLC, and then all of your personal expenses become deductible. I actually saw, I think it was TikTok, I saw a video of 2 people who were standing in front of a room full of people telling them that if they formed an LLC and lived their life through their LLC, then all of those expenses were business expenses and were deductible. That is 100% incorrect. An LLC, first of all, an LLC does not make an expense deductible if it wouldn't have been deductible otherwise. So whether you're a sole proprietor or an LLC, doesn't matter. A business expense is a business expense. The code section for that is section 162. So if it meets the criteria to be treated as a business expense in section 162, it will be that way whether you have an LLC or not. So you don't necessarily need an LLC for tax purposes. So your personal expenses are personal, even if you pay them out of a company bank account. Paying them out of a company bank account does not make it a business expense. No, your hair, makeup, and nice clothes are not deductible, except in certain circumstances. So for example, let's say you hire a makeup artist to get you ready for a specific photo shoot. Then hiring that makeup artist might be a deductible business expense, but the makeup that you buy throughout the year because you're a social media influencer and you have to look at all the time, that doesn't make that a business expense. It's still personal maintenance and it's not deductible. We see this a lot with social media influencers. I had to buy a nice purse. I have to buy a nice car. I have to own nice stuff. I have to have beautiful artwork on the walls because I put out content. That's not how that works. That does not make those expenses automatically business expenses. It's a case-by-case basis. So just know that clothes that can be worn anywhere are generally not deductible. And then your hair, makeup, and just regular routine maintenance, even if you think you have to look good for your job, doesn't make those business expenses. No, your travel is not deductible just because you have an LLC. If it's business travel, it's deductible whether you have an LLC or not. So personal travel is not deductible whether you have an LLC or not. No, your grocery shopping is not deductible just because you paid for it from your LLC bank account. So this is one, when I saw that video on TikTok, I think my eyes started to twitch and I think I lost my mental faculties for a minute. That was just blatantly wrong advice. And I can't imagine how many people heard that and immediately ran out to implement that strategy. And it's just flat out wrong. So those are some common I found this on the web. Tax myths that I hear all the time on social media. As a tax professional myself, I get really concerned when I see those posts because I know people are relying on that to make decisions in their business. So the bottom line is consult with a tax professional. And I say that with a certain amount of caution because unfortunately, social media posts are designed to increase clicks, right? It's designed to increase traffic. They don't tell you the downside. They only talk about the sexy side of the tax strategy. And unfortunately, there is no education requirement and no licensing requirement to be a tax professional on a federal level. Anyone can get a PTIN, which is a prepared tax ID number. Anyone can get one, and then you can start offering tax services to the public. Some states have licensing requirements like Oregon and California, but most don't. So there's no barrier to entry. And as a result, there are a ton of bad tax professionals out there. So don't be afraid to interview multiple tax professionals. Don't be afraid to ask questions. Don't be afraid to ask them to prove that they know your industry or that they understand the specific nuances to your industry. Even if they're a CPA, does not mean they know anything about tax. There are a lot of CPAs that have never seen a tax return before. When you become a CPA, there's two tracks. You either go audit or tax. And for all those who went audit, they may have never seen a tax return. So don't assume just because their name has CPA after it that they know tax, because they may not. So don't be afraid to really vet your tax professionals. We spend a lot of money on taxes, and not all of it can be mitigated. But when you work with a good professional who spends time learning the ins and outs of the tax code, who spends time learning how to advise on taxes, you can really find yourself saving a good amount of money. So I'm Andrea MacDonald. I love talking tax strategy. I love talking bookkeeping. I love talking about getting your books up and running. I can be reached at hello@steadfastbookkeeping.com. Thanks, everyone.
Thank you, because I've heard so many, and yeah, then when you whatever deduction, however you realize, oh crap, I actually had to get in X, Y, or Z car.
Yep.
And what the meeting, yeah, it's a process. Working with a tax professional who actually and is going to have your back and not just file taxes, 1,000% recommend. All of these mistakes, because I've probably made half, done it twice just to put, whipped cream in a jar. Being a speaker today, thank you for sharing this. How does somebody go about getting in touch with you?
My pleasure. Thanks, everyone.
Cool. Thank you. And we will talk contact information, and we will see you guys.